Breakfast Club. My name is Darren Hancock, and here we are on October the 8th, 2024. Cheers to you. And my thoughts are out to all those people down in Florida. I'm hoping you're all safe down there. Lambo, I really hope you're keeping your head down, my friend, and your family and yourself and your friends and everybody down there in Florida are safe. It seems like a pretty brutal hurricane going on down there right now. And just sending out our love, man. We're there for you. We wish you all the best. All right, now let's look at the markets as they sit right now. Stay safe, Florida. All right, so we have equal highs above us. We've taken out yesterday's low and the previous day's low before that. And I like these equal highs above us and that mean threshold. So if we do get continuation today on the upside, I'd like to see that get up into the mean threshold of this up close candle. Right now it's kind of in a lot of chop. We're in the discount array. You can see how we've gone from premium. As soon as we drop below this, we come back into it for a run down below, create another reversal. Actually, you have one right here. That little imbalance, trade back into it, trade back up into the premium array, all the way back down to the discount array again. This little imbalance down here. And now we're coming back up into that premium array right there. So what kind of reaction are we getting off? Are we just going to start to compress now? That's my question. Or are we going to start to extend this? Because we do have equal highs above us, more equal highs above us, fair value gap on 1 minute or 15-second chart. So I'm looking for upside today. That's my overall bias at the moment. Got to stay nimble. We've taken out these lows, so it only makes sense that, and if you look at this wick right here, we're at 50% of that wick. It held price, and we've had a bit of a reaction off of that now. So I'd like to see this continue and reach for these upper, higher highs, relative equal highs. There's the level I wanted to see it come down to. There's 62%. Just moved my little prediction yesterday over. There's 62. And we're getting a reaction off that now. So I'd like to see us get down into above this level right here. Above that fair value gap. So yesterday's prediction in Bitcoin was on the money. We hit the 62%. And now I'm looking for let's see if we can get what is this, hourly SIBI here. I want to see this climb back up on top of here and use this consequent encroachment as support to go higher. That's what I want to see. Consequent encroachment and go higher. So I want to see a big bold candle get up in here, come back down, find support at that consequent encroachment, and then push higher and start running for this premium range here again. I want to see it get above this for the range to extend. So that's Bitcoin. Natural gas dipping right into that gap that we didn't want it to hit into, but you know, if we're hitting these relative equal low or relative equal highs right here, these old highs, we just hit that today. It'd be nice to see that stay off, react off of that now and start climbing higher, leaving this open. If we don't, if we continue to drop down and find support off of this to go lower, then we're heading for this fair value gap, or this, sorry, this BISI here. There's that gap that needs filling. It's filled. Now if we start to continue down into this BISI, yeah, that's eyes on here. We'll see how that ends today, how it closes. We want to close above this candle's close. That's what I want to see in natural gas. All the rest of them we'll kind of wait and see. That gap there would come down to about 25% of this. If you take this whole range, you put your fib tool, not that you guys are into this particular stock. That'll bring us back to that old high right here, 75%, which is 25% return back into that fair value gap again, or that those SIBIs. I want to see, get into here. Be nice if we just reacted off of this and left it open, but I don't think there's a fill likely to occur there. Wait and see. And oh, the real estate REITs. Goliath still sitting. Soybeans came down to the level we're looking for here. So extend that out. That's the level I'd like to see it reach down into. So far, I think we're almost on the money there. That's at 10.84. $10.15.4, and the low on that one is 16. So got a little bit more to hit that level I'm looking for, which is this candle's close or open, sorry. 10.15. It's not 15.4, it's 10.15. So one more, come in and hit that. Then I want to see how we react inside this range. I want to see if it pulls back into the range and continues going higher. This just comes back to a fill. So that's what I'm looking for there. And it's also 50% of that wick. Wheat. Yesterday we wanted to see whether or not we're going to drive below that. We didn't. We just tapped below it. Now we're back into it again. So we're filling this fair value gap up, this BISI here. So if we start to continue to degrade down now, I want to see it drop down below here. If we get one more candle come down, try to trade back up into this, and then go lower. We're looking for that low to get taken out. That'll be confirmation we have a break in shifted market structure to the downside. Sugar. I like to see it react off of here now and start digging back up into this level. So this turned into a wick now and start climbing higher. I want to see the body get above here and use this candle for support. Continue pushing higher inside that range. Coffee. We got our support level, dropped below it, came back, found support at it, and now we're looking for lower prices. Look for this mean threshold of this candle to give way, and if it does, look for that lower level again. These lows, these lows to get taken out. Live candle, we're up inside that range. We're stuck inside that fair value gap right now. This inversion. I'd like to see this just react off of here now and start coming back down into this larger range again. But how it acts inside here now, if we have a body, we've had a body close below it, and then we open back up inside it. So I want to see a body get below here, find support, and continue going lower. Or if we continue to climb, I want to see it climb above here, find support on this, and then start pushing higher. So how I react inside here is important for me. Cocoa mixing relative equal lows below us here. So if they do enter back into that range, draw your fib tool to 50%. Look for the consequent encroachment of this SIBI. Oh, beautiful. This was really nice. See this level right here? If you draw this out, look at the fair value cap here. We traded through it, back into it to confirm we're going lower. Ran the lows. We're going to run the lows. So if we do get our pump back up inside this, half that wick, I'd like to see just half that wick hold and then roll over and come back down. If we're pushing back into the range, look for this consequent encroachment of this SIBI here. Cocoa. We found some support on top of the breaker now. I want to see this thing start climbing higher, taking out these relative equal highs we have above us. Buy side liquidity is sitting just above you here, so looking for upside in lumber. And lean piggies, where are we at here? So we've taken the 50%. Interesting. So you take this range, 25 is 50% of that range from there to there. Climb above. If we do get a dip down, I'd like to see it just come down into the old high here, leave this open, and continue pushing higher. If we do get a dig down, come up to these old highs. This candle's open, and see if we get further upside. That's a little lean piggies. Gold. These are the levels we were looking at yesterday. Watch that level right there. I've got that there for a reason, so I will extend that. So I want to see this fair value gap provide some support now. Off here, I want to see this start to react off of this and start climbing higher. And you're probably looking for the level we're looking for up here. So looking for that next price leg to go higher into this level right here. I'll leave that on there. See if we get that come to fruition. The downside of that, I don't see. If we close below this level on a close, come back inside it, then we're looking for lower prices. But I'd like to see this now react off this level and start going higher. That's 15 minute. doesn't really give you an overview for the whole thing, does it? Let me have a look at. Well, if you look at this, if this is the level here, it's 50% of that wick. Let's see if that's true. We just stuck that out there for fits and giggles. Let's see if that actually translates. Pretty close to 50% of that wick. We've got on the hourly, we have old lows taken. We have a reversal happening. We've traded above it and we've traded back into the reversal. And now we're looking for this to go higher. So I've got confirmation. We're looking to go higher on my hourly and the 15-minute. Daily. You're looking for this. Look at this imbalance sitting up here still. And 50% of that daily wick right there. That's where we're looking at the watch this level. So, yep, I'd look to see upside for gold. Well, oil's looking for new lows. Looking for big drive down in oil now. Jeepers, I'm still in this oil. I'm just chasing this oil right down right now. Oof. Okay. Initially, I was on the wrong side of oil here and had to get on the other side of it. So this consolidation, traded below it, come back inside it, then get short. And that's a nice little run in oil on the way down. So what level are we looking for? We've now cleared out these lows here. We have this fair value gap, and we just hit this new breaker over here. So we'll see what kind of reaction we get now in the lower levels. You want to see this get taken to the upside and start climbing back up again. If not, we have another run down for the next price leg. This could be quite the drop in oil right now. Looking for these lows down here. We'll see how that goes. And our consolidation, we're looking for this to run back into that high yesterday. We hit it, and now you're looking for this to go higher. So I'm looking for that consolidation to hold price and continue pushing up into this fair value gap above us. This SIBI fills. Look for this one and see how we act off of this one. We'll determine whether or not we reach for this mean threshold and go for higher prices. And that's it. Lows taken, reversal. See it right there. Literally pop. You catch it here for the run. And I didn't see that because I was too busy talking about the other stuff. But that's your reversal there. Below those lows. 7:30. This is my time, Canada time. New York is, oh, sorry. It's not 7:30. It's funny enough, it is 7:12. This is 9:12. It's New York time. So if we use Michael's principles, equal lows made jagged, reversal, relative equal highs, aiming for all these up here now. And we're looking to go higher. Remember, we're looking for these equal highs up here. Now we'll wait for the 9:30. The 9:30, we might see a bit of a retracement back in here, draw people back in for a continuation on the downside, and then slam it back against them for 10 o'clock and higher. Or we might just run up and take these highs out right now. I'm going to wait for the 9:30 open, and we'll see where we set up. And see if we do get a retracement back in there. Let's say good morning to everybody. Good morning, Hadi, Dave, Erica. Good to see you again, Erica. It's nice to see her return. Erica's kids off to college. Having a grand old time. Good to hear. Abs, good morning. Campione. Mohamedou, good morning. Dave Barry, not loving these candles in New York. They're looking funny. Yeah, I'm wondering if at 9:30 they're going to start giving us a false draw in and then start pumping it back up again. Watch this level here. Start mapping these things out the moment they start to happen. There's little imbalances all along here as well. Like you could see this return here, take out these lows again, one more time, and then take it higher. Meanwhile, oil is sitting there and creating a nice little bear flag right now, if you're into bear flags. That kid is living it up. That's exciting to imagine. My mom was telling me the other day, she goes, I remember when you were just a little kid crawling around on the grass in diapers. And I was thinking, I wonder what his life is going to turn into. I wonder what he's going to be when he grows up. I bet you never could imagine this, hey, Mom? I'm going to sit here and wait on all my positions now. Wait for a position to set up. This candle has been validated, so its mean threshold, which is sitting right where we're sitting right now. I want to see this now, right here. See if that holds price. And if we take this low out, look at that. See how it trades right on it, closes right on it. Draw you into thinking, oh, we're going to go lower. Not wait. Gotta wait. Mean threshold here. Watch this. My daughter got engaged over the weekend. Is this what you go? They went to college and now she's engaged? Egads. These kids grow up fast. Geez, we will all be back in diapers soon. That's true. Well, I'll be rolling around in the grass in my diapers again, I'm sure. Let's try to avoid rolling on the grass. Congratulations on your daughter. Oh, Dave's daughter. I thought that was Erica's daughter. Like, holy smoke, she went off to college and got engaged. Yeesh. Dave, well, congratulations, Dave. Congratulations on your daughter. Imbalance here now. This one. I'm looking here. I constantly keep just looking at these levels, and then you think this would be a nice breaker to take on the downside, breaking market structure, come back and trade into this, that fair value gap, and then start running back down. That would be a nice level to catch a reversal off of. There's also this imbalance here. But if it doesn't give us that and continues to go higher, so be it. So you got to prepare yourself a nice little daddy-daughter speech at the wedding there, Dave. You got to put it on TikTok or something like that. Some deeply emotional, grabbing story you want to tell of your daughter. That everybody just sits there and, that's so beautiful. You know, you got to rock the audience with your story. So it looks like we're going to come up here and take out these highs. I still like to see that reversed now. Draw people in to thinking that we've maxed out, start coming back down again. Right now they're running all this liquidity. If not, we're obviously still going up. And if this reversal, if you would have caught that reversal this morning, you're in Candyland. You're banking, and you're constantly looking for these little reversals, and you want to say, have we traded below it? No, look at that. We traded right on it. We traded below it. No, we're into it, and away. So we haven't got a reversal yet. So if you're managing this on the backside and you just want to manage it from a reversal perspective, you've got in on the reversal, you've taken out these highs, whether you pay yourself at these highs or you trace it back, or you pull the whole range and then, or the whole candle, take 50%, 62% on the way up, whatever method you use. This other method is just simply saying, well, if you entered in on this fair value gap here, the reversal, and then continue going higher, you wait for the next reversal before you consider unloading your position. That's just another, if you're not selling portions out on the way up, but if you're trying to hold this for the large range for the day, like that whole candle, then you want to look for the moment you see a reversal get taken with a breaking structure to the downside, then that's what you want to kind of keep in mind for getting out of that trade. This is the 15-second chart. So as you can see, there's nothing in here that will support. We might just have a slight break in structure, but we don't. We've got imbalances on this side now. So you have we haven't got a break in structure yet, but we have a fair value gap or a SIBI here. Now we've got, if we get a body that closes here in 12 seconds, we have a body below here. 2, 1. A body below here now, looking for a return back up into this level and drop lower. And there's the return to that level. Now you want to see this start dropping lower now. If we do get a return back up into this level here, that's going to be a key level for continuation to the upside or that reverse. So this is the kind of thing you want to see now. This start to come back down, give people that false sense that we've gone higher, that if they're aiming for that, come draw them in thinking that we're going to run these lows out here and then take it higher at 10 o'clock. So looking for this discount array down here. We got to wait for this to get below this level and this level here though. For me, I've got to see that get taken on the downside. There you go. So see that, watch that 5 seconds, close. There you go. Come back and tap it. Let's take one short right there. And another one short right there. Would not like to see it get above here. that fair value gap. Put our stop right there on the high. Fill right there. Ooh, ran right through us. We got 3 minutes before the I'll close that out and wait. Wait for 3 minutes. Wasn't done damaging us at the top. And did you see where I neglected to see right there? See this low taken imbalance, traded above it. I missed that. I was too busy focusing on getting in on that for a short and didn't see this here. Found support at that and start running higher. I missed it. So if there was a short in if there was a short in here off of this and you're aiming for this low, that's your run down, reverse on the way back up. I totally missed that. So that's a legitimate loss. See how they found support off of this right here? This level. You went through it, up through it, back, found support, consequent encroachment, left. Into this order block here. There's your 930. Let's wait and see what the range sets up now. Reverse. Short inside this range. Fill. Back to this level here, or that little imbalance level. We have an immediate rebalance here. Okay, we're into that level now. Looking for the lows to get taken. Come back, find support at this. And then go lower. Oof, no, they're already through this. Wait and see. So if you got this for the reverse, you're aiming for your first level. Pay yourself. Move to break even. See if we enter back into this level. That would be nice to see that breaker hold. Nope. Right all the way up. Mean threshold, this last up close candle. Morning, Mr. Pips and Joe Mack. Good morning. Good morning. So if your stop loss was sitting right there, you got a good squeeze. Not that you should be trading that right now. Or just wait for the 9:30 to situation to unfold. Out of curiosity, I want to see what this 50% of that wick, well, that whole body candle. So if we just hit the mean threshold there and start to retrace back down into this candle again, we're looking for the lows. And then I want to see it pump back up in here after 10 o'clock. Sell side liquidity sitting right here. Around in here, boy. Holy smokes. One more run up there. Now, do we come back, find support at this and continue pushing higher? Or do we just work all the way through this now and really start throwing traders off? Right back up inside it there. Hmm. Regular trading hours. Level. I like that for a continuation on the downside now. Got 1 minute candle, got this reversal right here. And it literally has closed on that level. So we have not got a full candle close below it yet. Yeah. Fifteen minutes. So you'd want to see this fair value gap get taken on the downside, close below it, not on it. That's like a bear trap. You're looking for this to, if you think that's the short right there, you got a little wick down and you went short on that and didn't get a close, then it went up against you. Now it's squeezing your stop loss. What do we got on the 15-second chart? No high taken, but fair value gap, busy, return to. See what acts inside here right now. Going higher. Find support off of here. Back inside this SIBI. No high taken. This one's been traded below. Back inside. You can hear now. Pretty tight little consolidation. Watching this one here. Look at this low. Equal lows. Turn back into that. That's a 15-second gap, not the 930 one we're looking for. Though it is interesting that that one is holding. Let's see if we can trade through here. Find support off this candle. And go lower. Here. Stretch this out a bit so you can see what's going on here. Cut this fair value gap here, taking that low, trading back up into the premium range right there. I'm going to see if this and this holds. Which one gives way for further extension? The other side's been made jagged. Well, not really made jagged, it's more even. But we're trading back up into this one or this one. Got this little fair value gap down here still. Look at the range. %, ultimate trade entry. Back down into that discount range. Run back up into the premium range. Or the premium SIBI. BISI, sorry. Now I want to see it start to really slam through here. Now you've hit that ultimate trade entry 75% back into that premium array. You want to see it close below here now, not just sit on it. Wicks down, do the damage. Bodies are still respecting that. So again, we want to see it close below that level and close above this level to determine which direction we're going to go in. Otherwise, we're still stuck inside that little range. So I can stream a trade. Have a great day. Might jump in later. No worries, Dave. Sorry, I missed. Probably gone for a while now. Morning, Hans. Again, keep your eye on this level here and this level right here. I think I'm going to look at the premium and discount ranges there, and I think that one is discount still. No, it's not. No, it's not. See that? It's still in the premium, so look at this one here. We're going to trade below this to go lower, or above this to go higher. That's right in that. There we go. Let's see where we close on that now. There, closed above. Look for a return back into here. There. Now you would like to see that go higher now. Back inside a breaker. Oh, we've closed below it again now. See how you can get bashed around inside here? We're still in the 930 range. You didn't even get rejection block there. We've traded below that. I'm going to draw these out so you guys can see them. You can see how you can get bashed around just chasing these fair value gaps and inversions. Trade below, trade above, find support, go higher. Takes the highs now. This was just a retracement back into that fair value gap fill there. That BISI fill. Now you've got the highs taken. Now we want to see, do we retrace back into the range again and start seek and destroy above and below. We have the mean threshold of this candle here. So watch right here. I'll put a little line there. See if that level provides any support. Should it come back down in there? See if we trade below, trade above. Take out the highs again. Relative equal highs here. Keep your eye on that little imbalance there. Here. Eight more minutes. All highs. That little imbalance there. You have to ask yourself, would you have caught that when it's beating you up on both sides of it here before finally going higher? I wouldn't have seen that. So 6 minutes, we might see a run above these highs for 10 o'clock and then start pulling back into the range again. So we'll see if that's where we end up gunning for. Then we shall just wait for an opportunity at 10 o'clock. Yep. Four more minutes. Look at your 1 hour chart here. You got these lows taken out here. Reverse. That's the premium array inside that larger range here. So I want to see if we get a reaction off of here on the hourly. So we're at 10 o'clock. We hit up into this range here, or this BISI inversion. If we hit this and reverse back order block and then drive higher, I want to see how we act inside this one, because we've got these relative equal highs above us. So how we act inside this on the hourly will determine whether or not we'll reach for that. That may not be our objective for 10 o'clock. We may be looking for that as a retracement back into here before running back higher and taking that out. We've got an interesting little possibility of directions here. That will become inversion the moment we get close below above it here. Then we want to see it come back, find support at it, and push higher, preferably off this order block. One more minute. We're into this little Is that a high? No. Quick run up at 10. Getting to that level, see what kind of reaction we get here. You got relative equal highs right here, and we've got that regular trading hours gap. From yesterday. No, I guess that would be from the 7th. Looking for a fill of that now. So the highs here are 18725, 194. So we've taken these highs here now. Now, if you want to see this pop through here and find support at this and start running higher. If it just freezes on that level or the mean threshold of this candle, the wick, see that climb higher now. You can see how Michael talks about this first presentation, how that was providing a level of support to go higher or lower, depending on where your bias is. We're looking for these highs for the day. Something else here. Let's see if we got something more interesting happening. Remember our Bitcoin idea? That being the low. We've got the continuation on the upside for Bitcoin. So far that's panning out. Natural gas, so far that's panning out. We got that little reaction off of the highs here. And we opened up. looking to go higher, which is good. That's kicked off of that level. Nice. So now you want to see that climb higher too. I'd like to see that. And we're pulling back into the range there. That's good that we wanted to see that in soybeans. And this level here, we're still waiting for it to close today and find out where we're going to be relative to this fair value gap here, whether or not we're making a run on these lows. Sugar. We've got a close above here on the hourly. That's good. Run back into there. You don't want to see that close any lower than that. Now you want to see this turning into a wick and start going higher. That would be the ideal entry right there at 22.44, and we're at 22.46 right now. So if it actually closes below that, comes back into it, you have an opportunity to get out before it runs for these old lows here. So we'll see if this reversal here is holding based on that 244. Coffee still heading down for our objective down here. So far, so good. Upside objective, we're still looking for this in live cattle. So far, so good. Cocoa, we're looking for down lower. So if we come back into this fair value gap to find some support off of it. I'd like to see this right at the level it's at right now hold 50% of this wick, hold price, and reverse and come back down and never come back into that level again. I'd like to see that just start coming down, back down now. Lumber coming back to support off the breaker. That's what I'd like to see hold now. Buy side liquidity still on that. Lean piggies, we're still looking for it to go higher, back into this level here, 87,550. Gold, it did not go higher. We came back into, where are we in here now? Order block, fair value gap, support. My bodies are still respecting that level, so we'll see if we get to see how it's still sitting inside this little guy here. Wicks are doing some damage back down into fair value gap here, or this busy. And we'll see how that reacts in the next 15 minutes. I want to see that start to come back up into that range there before climbing higher. If we get a 15-minute candle that actually drops below that, then we're looking for a continuation. We got to get through this fair value gap busy here, and then use this as support to go lower. But I want to see this just wick, and then leave. Oh, forget that one. And we're still looking for this guy to go higher into that range there. We retraced back into our levels that we're talking about for consolidation. CAM model 1 entry for a run back up higher. What's oil up to? For me, I want to see it take out this high here and use that for support to go higher. If not, we lose this here on the downside to go lower. And we still have a lot of liquidity sitting down here, which we've pretty much cleaned up on the Asian session from yesterday or from Friday, Sunday. Oh, we hit right on there already. This fair value gap SIBI here on the reversal. Look at that. Right back to it and fill right there. Getting a reaction off that now. To give us a reversal here. Again, you've got to break up out of this range here before I start considering going long again. And we're still sitting here off of taking these highs out, waiting for something bigger to set up here. We're just compressing here, waiting for something to happen. It's a wait and see game, folks. This is the time we have to sit in the charts and just watch price action and wait for a setup. Don't push anything. You just sit and wait. Just kind of read price, see where you can kind of stay inside the price action. I got flipped off of it a couple of times this morning. So we got liquidity above, liquidity below. That's that wick. Let's see, get below here now. This wick, 50% of it. Just ran up, popped above it, clean that stuff up there. I'm looking for lower prices here. So we just keep coming back up and hitting it again and again and again. So get below here. Are you bored yet? Are you bored studying this price action yet? Or just looking for levels, looking for wicks to see where you get support at the wicks? And see if they continue to hold price so you can get lower or higher. smaller. See how that level here, the premium level, gives us some support, and I want to see this just start rocking it back down into this level now. So looking at that whole range. Again, you got to watch this level. Make sure we're not hunting for this liquidity again here. We've closed above here. So watch this one. If we close above that, then look for these equal highs above you here again. Like they're not letting, we've just come back and filled this fair value gap here. Body trades above this here. Now look for this liquidity above you here. I want to see that get taken, create another little fair value gap reversal. Unless we just keep hunting for this liquidity up here. And people are looking for the reverse, and they're just not letting them get on. So you always got to kind of keep these ones in mind and look at what it's reaching for down on this side. And when it hits a logical level of a fill, and you see this after taking out lows, then you got to be curious as to saying, is this now going to provide a level of support? Anywhere from here to the top of that level there to go higher. And if we close below that, then you're looking for continuation on the downside. See how the wicks do the damage? Bodies close right on it. So now you're just sitting inside here, waiting for it to decide, is this going to use this to go higher? And reach for these highs here. There's nothing really that supports this little tiny reversal here. Inside that range, right there. A fill. Now, what's it going to do here? We want to see it keep driving, keep going higher, using this fair value gap as well as this BISI here, SEBI to, there you see how it's gone above it. See this keep climbing higher. How many of you thought that as soon as you saw this wick going down here, oh, it's going for the lows again? Look, wait for it to see where it closes. The wicks did the damage. That's a classic example of wicks doing damage, putting pressure on your stop loss. Then you squeeze and buck when you're playing chicken with the train here. It came all the way down, turned around and shot all the way back up. And if you're ejected. So if you were sitting here getting frustrated and you close that out too soon, and that was your objective, ideal entries right here. If it trades below it and trades back to it, then you get out. So that's your ideal place to enter. You get a bit of a squeeze. Stop loss is sitting here. That's all we're doing is just rinse and repeat, looking for that same kind of setup. In a sloppy market like this, it's hard to find that entry, but that's ideally what you're looking for. Now the highs are taken. That's what you're looking for. It's good. You want to see this candle here now, provide a level of support. This come all the way back down into here, into the mean threshold of this candle, or just use the top of it for support and go higher and take out these highs here. And what premium one have we got? These highs are taken. Here's your first one. Inside that range, you got premium. You have to be right down in here in your discount portion or come back into that range there for this one. So support here, continue going higher. See how the bodies are still sitting inside that fair value gap that we're looking at back over here. And the next one I'm looking for is over here. Inside the top of the breaker, all the way to right there. And it hit it right inside there. Now, what I'm outlining here is this. From that close to that open, all that inside there is what I'm marking off. You see how it ran all the way back up inside, hit the consequent encroachment, drove all the way up, and then start working, coming back down. So that's the premium array. Inside the larger range, this is the discount array that I'd be looking for. And you want to see this provide support and start climbing up on top of these to go higher. These are the wedges, the cracks in the rocks where you get your fingers into to climb higher. Keeping in mind this big breaker right here, this last up close candle swing, it takes out these lows. 50% of that sitting right here. We're getting some nice wick action off of that. And remember that level here, that candle? We're coming back into it. So that whole area right there is my area of interest as well. This fair value gap SIBI here, inversion, comes all the way back, just taps it right here. Inside that, fair value gap here, we are not running through that on a close. We're just wicking through it. So it's still got support to go higher for me. So until we close below here and here on the discount to extend the range, I'm bullish. Here's the bottom of the hour now. It's bullishness, taking out the highs. Still bullish. Look at all these lows here. See, hourly, you couldn't have got in on anything on the hourly unless you looked at this order block grouping here. As soon as you trade below it, you trade back up into it for a short. If you're looking at that one, that's your setup. Or on the lower time frame, 15-minute. There's a little imbalance right here. Body trades below it. You trade back up inside it here with this candle for a short, aiming for lows. Waiting for market structure to break. If that's your cup of tea, then you look for market structure break right here where the body trades below it. Then you trade back up inside that order block or breaker that takes out that high and that high. So you trade back into it right here, and then you get short there. So there's your early Asian session. If you're waiting for this guy to get taken out, body trades below it right here. You trade back up into it right here. There's the open, open, close, right into it, and then continue going lower. That was the area of interest. Trade back into it. You're going to see that trade back into there and then go lower again. That's a 15-minute chart. And your 15-second chart right from the top there. That's the high. Oh no, that's only the high over here. We got a little higher yet. That's still higher yet. Oh, this is the previous day's high right up here. Oh no, this is 9:30. What is this one? See it right here? You gap down below it. Right there. If you can't trade back up into it, that level, wait for this candle to get taken. It gets taken and you have to follow that candle all the way down now. And say, what's the last one it took out, which is this guy here and here. You add those two together and it comes all the way back up inside the 50% of that range there. Goes lower. Your stop loss would have to be sitting back up here. You get a big squeeze on that. Look at this, right back up into a fill. A little bit of wick damage. There's a little, not a little imbalance there. Yeah, there's a little tiny imbalance sitting right in here. And a continuation. Let's get back to here. We got our continuation for our going higher. Still looking for the high of the day up here. Do an old high. See this stay open. Consequent encroachment from here to here of this BISI. You want to see that stay open there. Just shy of it, which is a great sign, and continue pushing higher. With our upside objective being these equal highs above us here. So this is just the daily candle, so we want to see this continue climbing higher there. Gold. Ooh, look at that gold. Totally on the wrong side of that one. So when we lost this right here, so if you're looking at this discount array here, as soon as we trade below it right here, you go, ooh, I'm on the wrong side of this. Trades back into it. Ideal entries here. I was looking for this here for continuation. It didn't. So look for this discount fair value gap here. You trade below it. You go, oh, I'm on the wrong side. We've closed below that. Gives you an opportunity to get your trade off there because you're going to go lower. It's easy to say now, you can see that, but you'll see many times where we look for an opportunity for to go long and it fails. That's where it fails. The moment you close below the level you want to see is a level of support, then it trades back up, gives you an opportunity to get out of your trade before going lower. But you have to be able to trust that those levels are going to do that. And as you saw this morning, we got beat up lots of times where it would run through it and through it and through it multiple times. So then you just look for the breaker that supports that range. That has to get taken before you just keep getting beat up on both sides of it here. Just closed below this low, opened, came back just whatever the low is there. What's the low? 6473. High is 647.2. So it's like 0.1 short of hitting that as a perfect return to the low. Now we've hit it. We were just a tad bit, one handle short of hitting it, and now we're right in it. So that level there is 15. And the low on that candle right now is 14.6. So we've hit that level. Now I want to see how we act inside this level. If we close below that fair value gap there, then they're looking to retrace back into this consequent encroachment before going lower. So tomorrow, if we see this close here, you can see this open up, run all the way back up into the consequent encroachment of this wick or candle, and I wouldn't want to see 50% of that wick give way before going lower. And see how we're pulling back up here inside this. So if we get back up above this on a close today, above here, then look for this to fill and then push higher through the mean threshold of that candle. So we've got to get through those open closes, which is right at the mean threshold of the candle, and then start going higher. That's the level of support you want to see on the daily if you're looking to go higher. Came right back into our level here. This is still looking for our downside objective. That's still sitting there. We want to get on top of that. Mean threshold, we've eaten through it. Now on, if we it just come back into 50% of that wick, which is where we're sitting. If we react off that, this turns into a wick now and continues going lower. That'd be nice to see. Or at least it closes below this level here again before going lower. Lumber still doing that. Lean hogs still clamming. Looking for this objective right here. Let's see. Still waiting on that one. Because oil's going lower. Gas is coming down. Bitcoin. Tracing back into mean threshold. Mean threshold. We're through this candle, this fair value gap again now. So if we get a trade back up into here before your stop gets taken, if that's where you're looking for your ideal entry for a long here, and that now we've traded below that, if that closes on there for the hour and then trades back up to it, you get an opportunity to get out of your trade before your stop is taken. And then wait for the low to get taken and use that for support to go lower, or wait for this high to get taken and find the fair value gap to go higher. Oh, look at that. We're trucking away there. Reach for our little objective there. How many of you were patiently waiting for this level to get hit? And how many found an entry down here? I have an entry on the 1 minute chart inside this order block here. 209 right here. $209. So it's getting off of this order block here. All right, let's hit it. Let's hit it. Let's get our objective. Just want to see that hit it. And booyah, objective hit. That puts me up for the day. That one little trade from there to there is all I wanted. So that's what 209 is my entry. 209, 272. I'm out right there, so that's 63 handles. I'm all right with that. I'll move to the sidelines and wait now. It's a long day waiting for your ideal entry, boy. None of those are real ideal, but they're now I'm looking for this to keep pushing higher still now. Looking for the next upside objective would be here at 293, 294. Now, if we've just popped above this high here, right? If this becomes the reversal, just taking out the highs, leaving those as relative equal highs, and coming back into the range, I'm looking at this candle here as a potential return to. So watch here. Nice one, Darren. Daily goal done. Going downstairs for breakfast with my wife. Victor, it's a great idea, man. We will look at the PMSB's entries. Gracias, team. You're welcome, Victor. See how we've got below this level now? So reversal, discount. So we're deep inside this range here now. So pull your fib tool from here. And obviously there's no entry there yet, unless there's that is a 15-second chart. So pulling from here to here, there's 50%. So if that's the reversal you're looking for, look at on a 5-second. Let's look on a 5-second chart to see if that's actually there. Entry. So if that's your 15-second chart and it trade below, look at that, trades right back into it right there. There's your continuation for your 50% of your range. Nice little return there. And it's just shy of that consequent encroachment of the 15-second BISI, and then a continuation. How beautiful is that? Lovely. So those of us who are still in the real world, though, would like to see 15-second, or let's go back to the 1 minute here and see what's happening on the 1 minute chart. So on a 1 minute chart, I want to see right here. That's 15-second way up there. This is 1 minute right here. I want to see that trade below that. Close. Ideally, you want to see this candle give way and then start digging back into here. Don't give back any profits if you've made them today. Just wait and see. I like this now. See how we traded below it? Almost came back and tapped it. Did I get that the right one? Didn't quite tap it. So demo money, we're just going to demo trade this one. If it comes back into that level, you want it, or if we lose this candle's low on a close, come back inside that, and it's quite a big range on a 1 minute chart for a run back down into this BISI here. Ideal entries right here. If we're wrong, we can get off of it and get back in. So we'll put one there, put another one here. This is just demo money now, so I've done my trade. This is just more practice. So I'm looking for that consequent encroachment to get hit. And we'll put another one on there. And this is the 52 candle. If you guys still remember my minute charts, there's another one there. And the last one will be right here. So 50% of that wick, you want to see that hold down and continue pushing lower. If not, my stop loss is going to sit right here. And we have not really traded below here, so you got to watch this doesn't turn into a bear trap. Even though we've traded below that, I'd like to have seen this candle get taken on the downside. And we have no real swing, no consolidation or break in market structure. So this can set itself up for a bull trap or bear trap right here. So we'll watch to see where this one goes. I'd like to see it just leave from here right now. So I don't want to see it now you want to see it get some legs, get intention to get out of here. If not, we haven't really taken a low. So we've got a reversal right here. Not a reversal, but we've got a fair value gap SIBI here. We've already traded above it. We're trading back into it. If we trade below it, that's good. And then we want to see this continue on the downside. And you use this level here as support as soon as we get below that level. There she be. I'm going to move that to there. Like I pretend I was going to take one off there. So I'm just going to move that one into a profit a little bit. There you go. Now we'll take this range from here to here and we'll trade a little, we'll do that little fib tool trade. If we hit 50%, you'd be moving to break even, take a portion off there. I think it might be just a tad bit too low there. There we go. It's probably going to come back and give that one a kiss. So we'll try and go. It could hit anywhere inside here. So I'm just going to leave my stop. I'll will to take a loss there. 20 bucks. See, it's a logical level for it to reach for is in here. Now you want to see that just kick off of that and come back down. We've taken the lows out now, so that's where you would have paid yourself. No, I don't want it to go any higher than that, so I'm going for a break even. I don't want to see it come back up there again. All right. It's done its bit. No more coming up here. Work these levels lower. Lovely, lovely. There's 50%. Pay yourself a portion there, or we're going to work this one down here now. I don't want to see the mean threshold of that candle give way. And if we get to 62, then we'll move this to the 50. Lows are all taken now. Pay yourself there. If it comes back and takes me out, I'm all right with that. 30 bucks. Anyway, you get the idea. So you pay yourself a portion there. So this could be just a little run below this low and start pushing higher again. Now you want to see something that has intentions of getting back down there and using this order blocks mean threshold at worst as an opportunity to come lower. So it ate through 3 of them, so chances are it's going to go back a little higher. $10.43 candles soon, or I'm out. 10.43. See how the body did not close above the mean threshold? The wick did the damage, took me out. Fair enough. Fair enough. Half that wick. Keep coming down. Wait, see where that close. Oh, it's taking out the whole wick. We have not got a body below this thing here yet. This is now valid. Looking for this level here. If we get some support on top of this to go higher. See how we've run all the way back in there. If you're not paying yourself at that 50%, you've lost an opportunity. It was only $30, but it was to make a point that pay yourself here or move your stop loss in to 0 risk. There's your consequent encroachment one more time. 50% of that wick. See how the bodies are not getting below that 50% of the range? That small little range right here, since it left at 10.41. It's like it's just finding some support there, and the wicks are doing a bit of, I'm just running down into the discount range before going higher. So kind of watch the bodies and look at that 50% level and say, look, it's making these attempts to get down here and just keeps hitting resistance. You get a little bit of a wick, it probes down in there and just dips into that fair value gap. Busy right here. And now you want to see this. I'd like to see this actually start popping through here now and working its way up again. You're trying a long in oil, are you? A long in oil. Ooh, Nelly. There's a reverse. There's a 15-second. You're trying long. Where do you try and long from? We did not take out this part here. We've come back. Yeah, you're still inside that fair value gap on a 15-second chart. So I'm not sure where you got your long there, Campione. Tell me what time frame you're on for oil, because I don't see a long here. Anything, you're just seeing a continuation on the downside, taking these lows out and a return back into this little box down here on a 15-second chart. I'm looking at this whole level right here for that to reach for. I don't see a long in here, buddy. Sorry. Where are you looking for a long? Let me know what your time frame is, because I can't see your long right there just yet. So an inversion on a 5-minute chart. On a 5-minute chart, let's have a look at the 5 minutes here. Ah, I see what you're looking at. Ah, see, this is that bear, this is the bull trap. This is an example. When you've got this candle sitting right here that forms the fair value gap, and it's the bullish order block and not another down candle. You know, you could have like a down candle, wick end, a break, down candle, up candle, and then that creates that fair value gap as this was a down candle. It's not, it's a bull candle. So you want to see this trade through that level and or a break in structure first before you look at that as a long, because this is a bear trap that you're going to get caught in if you say, yeah, it traded above it, so I'm going to take that long. So let's say you did right there off that. You say, I want to take it long from here, the bottom of the fair value gap, because if I'm wrong and it trades through it on a close, I'm on the wrong side of this. It's going lower. So it goes, closes below, gives you an opportunity to get out here. Yeah, it gives you an opportunity to get out there, closes below it again, opens, comes back inside it, does not close above it again, trades below, trades below. So you had multiple opportunities here on your 5 minute to see you're on the wrong side of that. And then if you look at your lower time frames, you'll see that you're on the wrong side. But watch this guy. You want to see a break in market structure with a shift. Otherwise, you can get caught in a bull trap here. And that's a bull trap. At least that's how I see it anyway. Michael doesn't talk about bull traps, bear traps. That's just me. That doesn't mean I'm right at all. So here's the level we're looking for to reach into. Look at that imbalance right there. And the 15-second chart. Discount array, and there's a little tiny imbalance right down in here. So now you look for a long opportunity. Now it's taking out these. Does that make sense there, Capione? At least that's what I see. If you guys got any other comments, let us know. I'm all for learning new stuff. Just because I see what I see, that's just my setup stuff. Doesn't mean I'm right. And I don't mean to shoot your trade idea down, but just kind of things to look for, to be careful. Look at that consequent encroachment of that little block we looked at. So now you want to see support off of this consolidation. CAM model 1, start pushing back up, and I want to look for a trade in a 15-second chart up inside this level here. That's my area of interest. Not that you should take these trades because, you know, try MC long, saw an inversion, then another one on the 1 minute, entered it on the 1 minute. Understand 1 minute. Let me see a 1 minute one. Where's the inversion on a 1 minute? Oh, right there. So if you do, let's say you are going to go in on this 1 minute. So here's a really cool kind of idea. So here's your 1 minute box, right? And this is the one you say, I want to see the trade get above that. You see it gets above it right there. And you say, right now I'm going to go long on that. Okay, it didn't take out that candle on the 1 minute. That's the one you want to see it get taken on that and use that as support, especially when it's really close to creating your fair value gap. Or you say, I want this level right there to be my ideal entry, because if I'm wrong and I'm on the wrong side of this and it trades back to it before taking out my stop loss down here, I want to be low risk or super low risk. So you come back into here or consequent encroachment and take a little bit of a hit. So you see it come up here, it trades back in, it goes through the consequent encroachment, and you see this right here. You say, look, it looks like it's trading below that now. Comes back up, hits this fair value gap here, rolls over one more time and trades below here. You go, well, that doesn't look good. You want to see that pop out of here, right? You want to see some support in there, especially when the wick ran all the way down through that fair value gap one more time. Then you see it start to trade down again. You go, that doesn't look good. Then it trades through it right there, or that's your entry. You go long there, and then it closes below it, and you go, oops, I'm on the wrong side of this. As soon as it trades back in, I'm out, and I'm going to wait for that to get taken now, or this high to get taken to find support at the top of this to go higher. So I'd be waiting for that there. And it does trade all the way back in. So even if that was your entry and you waited and it started coming back up, you made a little bit of profit. Not that I want to say you want to make profit, but let's say we're looking for breaking even. I'm on the wrong side of this. Wait. You're waiting for that to get taken now, because there's only a 1 minute chart. So you want to wait for a better market structure break and that candle to get taken. It doesn't. It doesn't. Uses this box one more time and then trades lower, trades through your level one more time. You go, oh, I'm on the wrong side of this. Again, wait. And that was the 15-second level we're expecting it to come back into. Took out those lows, the consequent encroachment. And now we want to see this level get taken and that level with this candle. So I want to see this trade through here. See how it hit the box nicely on a 15-second chart? That's at an order block. It hit it. Let's go back to the 15-second chart here. You'll see right there and there. Oh, no, it didn't. Just shy of it. Did I line it up right? This is where I want to look for, right there. Yes, it did hit it. I was slightly off when I placed it. So that candle's low. Hit, hit, hit. Now you want to see it start to eat through, oh, like that, eat through it. There you go. Beautiful. So you've got your discount array we looked for. We said this, we want to see that is providing support for a long. I said, don't take it, but just keep your eye on it. And from here, 48 to where it's sitting right now, you're already sitting at 30, 28 handles or something like that. Okay, so there's the top, out. Move to the sidelines and wait. Now, if it gets on top of this and uses this candle for support, then you can use that to go longer. If not, if that just comes to the mean threshold of this candle, which it just hit, and stops and turns around and goes all the way back down again, then you've got to see how the body's trading above this. Good. Opened on it. We closed, opened on it, and then kept going higher. Takes out the highs. You see how that kind of makes sense there now? Capioni, and that's not form fitting it. We called this level on the way down. And now you get frustrated because now you start going, oh, look, it did go higher. Well, now when you get down into these lower levels, you see why it gave you that early indication that it was not going in the direction you wanted first before it was coming back in to fill that level up. So now that we've taken out that high, you're looking for these next ones here, because don't forget we've been in this little consolidation here for a while now. I want to see this candle, this high get taken, and this candle in the 15-second, not that one. This guy is sitting inside this one. So that's the level I want to see right there. That consolidation, pop above it, use it for support to go higher. Because if it doesn't, and we've got, look at this candle right here. There's the wick. Look at the 50% of that wick. Right there, draw it across. What do we hit? 50% of that wick right there. So are we going to eat through it? Or are we going to come back and start working our way back down again? We want to see a body trade above this level. It does. Comes back, uses it for support. So I want to see that going higher now. And we can use anywhere inside that, those two candles. So it can even run all the way back to that consequent encroachment right here. You want to see this stay open for a higher price, but I'd like to see that really shows me more bullishness if we don't get below. Now we're getting there. Now we're digging in there. Would have been nice to see that just hold it and then really show bullishness to go higher. There's the 50%. Watch right there. That's the bottom of that whole breaker that takes out all these lows. That breaker right there. We've come right back inside it here, right to the very bottom of it. And we're getting a kick off of it now. And if we eat through it, now you're looking for continuation on the downside. See how that 50% of that wick held price right here? You're inside that range. Watch this level here now. We trade below it, looking for downside again would be right in here somewhere. Just jumped the gun on it. That's good. It's good that you recognize that, Campione. So it's all cool. It's all good. See, now we've traded below this level right here. And you go, oh, okay, now I'm going shorter. So it came back up. We're inside this again. I was looking for this little downside. Take out these little lows here now. Let's see what we get. We're inside that bigger 1 minute. Curiosity. Little window here, this fair value gap. See how we're working the whole inside of that thing continuously? Work, 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 work. 50% of that wick. Held price. Now we're looking for it back inside that range, you see? That's why you pay yourself at rejection blocks. So that little entry from where we had it here to go long, take out that high. Pay yourself, move or use your fib tool to pay yourself on the way up inside that range. It's only 30 handles or so, but hey, it was enough to get paid. That's the bottom of the fair value gap over here. Taking out the lows. Done. Lows are taken. There we go. Pop into that level. Now, do we get a reaction off of this? And start to go back higher again, and you start to go, oh man, you can see how it's a seek and destroy and what levels you're reaching for inside the range. Always look at these little ranges that you're in and say, what premium and discount arrays can I be aiming for while I'm inside those ranges? And I always go fair value gap to fair value gap, or inversion swing to inversion swing if you're in these little ranges. So if you lose the 50%, then you start to say to yourself, what could I be aiming for way down here? I'm looking for that guy. Again, if we close below it, then I'm saying we're going to extend the range and take out these lows, and then my next objective would be down. My next area of interest would be like, it's actually inside that there. So this is this range, and this one is the larger range from there to there. That's those. So that's why you see these overlaps here. And if you're working inside the larger range, you still hit the same level. There's overlapping confluences right there. So you want to see this one give way and then work into here, give that one away, and then when that bigger range is gonna, you say, okay, we're looking for this one to close out now. Then it'd have one more little tiny level down here. There's that one. See how it hits it? I love it when it just hits it, sticks it, and then are we going to blow through it one more time? It. Right down that little tiny imbalance you'll see right down in your charts here. See that right there? Love it. Right to precision. Now you want to see we've taken out this low, all these lows, fair value gap. This is the order block you want to see it get above. Otherwise, bear trap, or sorry, a bull trap again if you're not careful. So see how we've traded into it, and now we're wicking down into that order block, or that SIBI again. Sorry, fair value gap inversion. So where that closes right now in terms of here, so we have to extend your candles down, have a look. So we're watching studying price action, see how now we've closed below it. So now we're looking for lower prices. I want to see it get through here now. Start working through that fair value gap and digging into this fella here, which is another range further down. There we go. Took that low. Came right back up to the top of the one I'd outlined over here. Where's the one I outlined here? Well, this one. Yeah, from there to there. So now that's been worked. Lows have been taken. So we knew it was going to go lower. Based on that one little observation, you keep looking at this observation and you can say, it's going lower. It's finally taken out that thing. So when you use these levels as support and resistance, you can see, oh, if I'm on the wrong side of it, if I was going to go long there, damn it, give you an opportunity to get out before going lower. Because if it was saying, okay, I took those lows, what if it went higher, Darren? Well, you'd have to see this one here get taken out and support at that. And that's what we keep calling, saying, all right, well, in order for it to go long now, it has to take that candle out, use this fair value gap as support to go higher. All it did was just come back in and fill it and went lower. Did not become an inversion. And now we've dropped below here. I love it. A little poke. And that one little tiny level we talked about, which is right here. Bang, right there. Come back, tap it. That's this little piece right here I'm looking at. Come back, find support at this. See how your body trades below it. Comes back up inside, find support. Away you go. Lower. We're extending the range. Lower. We're extending the range. Lower of the larger range. And we just keep extending that range down deeper and deeper. So that's how I kind of look at the price action, just to say, what side do I want to stay on? When do I look at levels as being supportive of a direction you want to see price go? So that's why we're looking at those levels there. And you're looking for this low here to get taken. First of all, look for the rejection block, which is sitting right there. That's where to hit right now. And ba-boom. Low's taken. Hope that makes sense to you guys. That's oil. Hope that helps you, Capioni. Now you're looking for, now that low's taken, look for it here. And it's the same kind of setup. You don't want to be caught in a bear trap or a bull trap until that high gets taken. That order block gets supported. So look for this. Say, I want to see this. And it's really not a swing point, so it's not a break in market structure. Ideally, you'd want to see this high get taken, but you want to see this one provide a level of support if we can get above it with a full body candle. And if there's no body that gets through this, then we're still looking at going lower. So you still stick with your down play. If that helps. Good. Glad it helps, buddy. Let's get back over to our regularly scheduled program. See this candle here? We traded below it. Come back, found some support at it, and continue pushing lower. And didn't quite fill that fair value yet. Michael likes to see these where they don't completely fill in. And then you want to see it start to march back up again inside this range. Order block, I want to see it hit this and now start coming back down. I don't want to see this start climbing up above that level. We've got no run back. Look at this order block from here to here. It's kind of like saying, I'm looking for it's not really a swing point, so I'm just gonna mark it as a I'll give it some setting here. Oops. There you go. Consequent encroachment of that wick, that candle. You want to see that start really rocking it through here now. Start coming lower. We can get through these two candles here on a close. Next couple of minutes, we should see a swing point. Or we could see a swing point below here and a fill of this fair value gap here. Watch the fill. There's the order block traded below. So we come back into that. Boink. They hit it. All right, now so we're up to this point here. We're back inside this one. We could see that come just up inside here. Right in there. Hit the bottom of our order block again. You want to see this stay open here. If it starts to trade through it, then you go, okay, so now we've got relative equal lows. We still have not filled this fair value gap in the bottom. We're just shy of filling that in. There's probably one handle or so. Bodies are respecting the bottom of this candle. We're going to get a fill. There's the fill. So now you want to see if this takes out this high. We've got this little swing here, relative equal low. So these are the ones where you go, well, I'd like to have seen that just tap below here, fill that fair value gap, and look for this as a reversal. That high to get taken, find support above that, and run for these highs above you. But because this is relative equal lows and we still haven't quite filled this one in yet, I'm not convinced that they're not going to make another run on this down here yet. So we've got this fair value gap here, that BISI inversion, right back into it. That would be your ideal entry for a short. If you're wrong and it trades above it before it takes your stop loss, you want to make sure you can get back in on that again before it goes higher. So that should clear you out if you're wrong. If not, then we want to see this start to really dig back through here. This reversal, because we didn't see this take out the low, this is just a fair value gap reclaimed, and we haven't gone through it for it to be an inversion to go and take that high, find support, and go higher. So right now, this is still supporting going lower. This one here, support, because it didn't take that out, less likely, equal lows, tells me I'd like to see that come lower. Sit inside this. So what we want to call before it happens is this fair value gap. I want to see whether it holds price, we lose price, and then I want to see that candle to go higher. It has to take out this with a close and use that for support to go higher. And that fair value gap there, or this BISI here, which is a inversion. When that now finds support at that, once we've already cleared this out, anywhere inside that level, could retrace back into it to go higher. If it doesn't, it keeps wicking through it stuff, which is not usually a good sign. You usually want to just see it come back at once and then just take off. So if it runs these highs, there's a small little imbalance right in here. Mean threshold, that'll put it right there. So if it's a quick wick up there and come back down, again, the body's staying below here. Seconds, quick run up there with a wick, come back down. This candle's 50% of that wick, holding price. That was the 27. We wanted to see a swing occur. And the next one is a 30, 32 swing. Retrace back down into here or take that high out on a 37. Anywhere from a 34 to a 32 to a 38. I want to see how that high get taken and then a reverse. So like a crazy Ivan and then a reversal. Bottom of the hour. Again, no bodies closing above this level yet. So the wicks keep doing the damage. 50% of that wick still holding out. There's the 30. That would be a nice little perfect place for a short here for me. Just thinking in my mind, not that you'd actually take a short here, but I'm looking at that for, I want to see that continue going down. That holds price here now. And we start to get below this level. There we go. So we'll see how that continues to push. New York YM SMT. Still haven't got a body below here yet. We're still sitting inside this consolidation or this little sibby here. We keep retracing, reclaiming this fair value gap. We come down, take the bottom, the high, the bottom, the high. We're still stuck inside that guy and that guy and that guy. I have another 25 minutes with you guys and then I'll sign off for the morning. Look at these lows. So this morning there. You have to be really holding on to this for a while to get your juice out of this lemon. That was the reversal this morning or this afternoon, or sorry, this 10:45 right here. We got our objective. You look for your first reversal after reaching for an objective, and there's your short. I like this one here for confirmation right there. Equal lows. Now you don't want to see that high get taken out again. So my stop loss from here would have been right there. Get ready to pay yourself here in that portion there. Just because this is a price action is so sloppy right now, you want to really cut your risk back. So if you made any profits on this one, we called this going up this morning, and that was the upside objective. If you did catch that, you don't want to start giving back too much of your, cut your risk in half now, because we're starting to get into the afternoon hour. There's going to be a level of retracement back on all this stuff that was created earlier. So we're liking to see that now. I don't want to see this run all the way back up here. Again, keep in mind that little level right there. Let's go back through some of these other ones we've been calling for this morning. That's definitely not worked out the way we wanted it to, so we'll get rid of that. That's already way through where I wanted it to go. There's a little imbalance down here, or a little busy right here. That's the 1 hour. We don't want to see price drop below that right there. Okay, so it comes back to here, order block. At worst, the mean threshold of that candle. So we're going to keep an eye on this candle right here, and we'll see where it failed and where we could have got out of that, looking for this to go higher. Okay, that's the 1 hour. Let's look at a 15-minute chart. So there's that candles we were looking for. So if we're trading back into this, we say, oops, we're on the wrong side of that. The moment we see this trade back through on a 15-minute and close below that, you go, crap, I'm on the wrong side of this. If it trades back into me and gives me an opportunity to get out, I'm out right there. And it continues going down. And then your stop loss, which was sitting down here, eventually got tagged. So you had an opportunity to get out right there at break even. And we see this takes out this low, and you go, ooh, look, maybe I've got another reversal going up higher here, right? That high's been taken. A little imbalance right here. That's taken out there. So if we get a retracement back into here, you got this one here to go short and this one here to go long. When they're overlapping, you wait for a clear signal to show you that you're on the wrong side of this or the right side of this. So comes back up into order block. Not quite the opening price. Yeah, not quite the opening price. Creates another little fair value gap SIBI, and we trade through it right here. So if you're trying to go long here, look right here on your lower time frames to confirm that are we on the wrong side of this. So look at this last 15-minute candle here. If you were saying I want to go long and it comes back through you and this, you go right here, we should see something on a 5-minute chart or a 1-minute chart that says I'm on the wrong side of this. You can get out at break even again. This is how you keep finding out you're on the wrong side of the market if you want to keep pushing this hard, because we've got this low taken and that low is taken with that candle. So you're thinking, okay, this could be the reverse going back up again. So let's look right here, right in this area for where did it fail on a 5-minute chart. So 1, 2, 3. So here's, let's say this is the level. We've got this one taken out 5-minute. You say, oh, look, I want to go long on that. Pull your fib tool from here to here and wait for it. You've got to be below 50%. So you've got to be pulling all these little tricks in here as well. So if that's my long and I can't get in there on this one, you wait. If you looked at this one here and you said, if it comes back into that, I'm going to take that long. Fine. 50%. Move your stop loss to break even now. Take a portion of your trade off. Goes to 62%. Move up to 50. Take a portion off at 62. And then all of a sudden it reverses on you. Well, here's the order block. There's the 5-minute reversal. Trades below it. We want to see this return back into this candle right there to go short below that low. So you've got that one to go short, and then you see the reverse that happens here, this to go long using the fib tool. You still, even though you're wrong, On the higher time frame, you want to go higher. You can see how this on the lower time frame inside this range, you would have paid yourself there. And you say, I've come back into an area now where this could be going shorter or this could be going longer. I've already paid myself on the way going up. So if it comes back and takes me out, which is right here, it takes me out. If I was at break even, then so be it. But I paid myself here and paid myself there inside that small range. Drop below and you go, I'm on the wrong side of this. Now we're going, okay, we're going to go shorter. Go shorter. Now you want to see this return back into this order block. This cluster right here. Continue going shorter. If we start closing above here and this candle, we're going to go higher. So I'm looking for this area right here to provide a level of support, which would be somewhere around the consequent encroachment of this SIBI. You want to see that stay open to go shorter. I hope that kind of helps you guys. There's a 1 minute chart, looks a little cleaner on a 1 minute. So we've got this little imbalance right here, imbalance right here. It's at 10 o'clock. That's the high at 10 o'clock. Drops below, creates these little imbalances, trades back up into them and the mean threshold of that candle. Stop loss is sitting here. You get a nice little squeeze. Then all of a sudden it continues going down, takes out the low, pay yourself, comes back up. If you haven't got in here, which let's say you couldn't get in on that, you weren't convinced that was a reversal. Okay. So then you go, I want to see this one get traded below first. And then if it trades back into that, I'll go short. You don't get that. It runs below that one. So you say, I want to take this one. Nope. Runs below that one. Look at this one. It trades below it right here, trades back into it right here. Good. You can get short there for this little low here. You get it? Now you say, if it trades below this candle's low on a close, which it does, trades back into it, I want to see that as a short. Aiming for this low. Comes back up, finally takes that low. Look at this level down here, inside that larger range. Premium, discount. Runs all the way back down into that level and then runs through it. Comes back, uses it for support, and then continues going lower. Look for the reversal. Trades through it. Now you say, can I get in on this level here? That candle doesn't give you that. It actually closes above this one and actually closes on it, opens above it, comes back, taps it, and then we get a continuation. We even get one more opportunity to come back into that order block right there. You still don't get this. You have this fair value gap that comes into the top. You don't even get the consequent encroachment of that because we're looking at this order block. Trade back into it. Now you get your long, aiming for premium array right there. Bang. So even if you traded from there, this order block here to that there would be 658, 580. That's 300 and some odd. 580, 300 and some odd handles. What? Yeah, that's 200. That's 320 some odd. What? That doesn't make sense. That's a lot of handles right there. Just running back into this range. No, it's 35 handles. Sorry. 350. 35 handles. We get above this. Use this as support. Right in here. Go higher. Take out the highs. Every time it makes a new high, look for reversals. Look for opportunities to see a reversal happening. Trades below it. Comes back up inside. does not take out your high. This is sloppy price action in here. So if you get taken on that wrong side, wait for this structure here to get taken. A nice little swing break in structure right here. It returns to it right here and continues down, takes out the lows. Reversal. If you don't get an opportunity to get in it here, wait for the next opportunity, which is right in there, a little tiny imbalance. You close above it right there, open, tap it, and then go higher. Look inside this range, 50%, pay yourself here, move to break even. You've got yourself a little piece off there. Abs is going. Thanks for everything. See you all tomorrow. Looks like a proper inversion, fair value gap on oil at 5 minutes. Anyway, this is Bitcoin. I don't know why I got so long-winded on Bitcoin, but we're still wanting this to close above this level. If we close below here, look for this, start running back down to this level. Yeah, we could get a discount right here, run for these lows. Cattle's starting to get its legs in the afternoon. Late in the morning, early in the afternoon, let's get its legs to go higher. That's still sitting. Gold continues to drop lower. Nothing, no reversal there yet on the 15-minute, 5-minute. Want to see that candle there get taken to the upside. And then see if that finds some support on that to go higher. There's a little imbalance right here. And here. 1 minute should show us something. There's your reversal on the 1 minute. Reverse. Body trades above it here. You come back, you tap it once there, you're long. If you want to wait for this to get taken out, so just inside that range, wait for this to get taken out and then a retrace back to here. It closes above right here, comes back, taps it here. Now you're looking for a long. So I'd be long in gold now that we've got a break in market structure to the upside. I want to see that continue going higher now. So if you like gold, I like gold for long right now. And you want to get above this level right here. That's the last of that range. A good little break above these highs here would be great to see. And then use this level on a 1 minute chart to continue pushing higher, running for these old highs here. So I do like these two equal highs. Using this as support right now to go higher. That's the next little part of the rock you want to see find support at. Because if we just take out that high, which we just did here on a 50 candle, I would not want to see it get below 627. So nowhere inside there. I want to see that continue climbing using this and this as a support. If we start digging below this breaker here for these lower prices, if we lose this order block, then we might be coming back down into deeper into this range. We've already hit that though. I don't see any reason for it to come back in here. This looks pretty well balanced. So I want to see that continue climbing, running for these equal highs here. Oil. Oil gave you 1130-ish reversal consolidation. You want to see this candle here get taken out because here's your fair value gap, but that's the candle you want to see taken, and that's the candle you want to see providing support. So it takes it here, this fair value gap. We traded above it, trade all the way back inside it, and you see how we trade below it now? See, like, could be on the wrong side of this. Come back, wait. See, now if you saw that trade below that and you go, oh, I'm on the wrong side, that's my long. Traded below it, crap, if it comes back, I'm getting out. I'm out right here, and then you see it start to climb up. Don't look at this and beat yourself up. Wait for that candle to get taken. That's the rule, or my rule anyway. Whereas that low is taken, you think, oh, this could be going lower. It trades back up into it again. You go, okay, well, if it gets above it, I want to see that candle get taken, so wait. And then you see a nice good displacement candle above. Then you go, great, if I get a retracement back into that candle, I want to go longer. So it pops above. We have a close above that candle. It comes back in. Look at it. Right in the mean threshold of that candle. Boom. And then off you go. Looking at the premium array up here. That big fair value gap sitting above you. Or not fair value gap. It's a price imbalance. We have a sell side delivery here with no buy side wick at all. So that's an imbalance. Volume imbalance and price imbalance. We run all the way back up into the edge of it here, retrace back into this range. We do not get below that low, and we do not get below this order block for a reversal. We work it one more time and finally come back in and fill it. We get a reversal here. Now we've taken out this high, trade below it and the order block, and then we trade back into the order block, getting confirmation. And run for the lows right there. We have another reversal now that we've taken out these lows above it and the order block. Come back inside it, found support. Now we're looking for higher prices. It's rinse and repeat over and over again. So that's a 15-second chart. The 5-minute chart, I think somebody was saying they were getting long on that. Looks like a proper inversion on the 5-minute. You like that 5-minute, Campione. You do like the 5-minute, my friend. Let's have a look. That's a cluster of noise there on a 5-minute chart, but I do see it. I do see your, but it's not a reversal, a strong reversal. See how we haven't taken out this low here, but it is below these lows. But that relative equal low would worry me. So on a 15-second chart, we made some quick handles in a 15-minute or a 15-second chart, but I do see your 1-minute or your 5-minute inversion fair value gap that you're trying to get support on to go higher and look for these equal highs. Now, if you want to manage that, have a look at your lower time frame to see if that is if it's still maintaining support for this to go higher. If you're staying in this chart, stay in that chart. You don't want to see it get below here. So if your stop loss is sitting, if your stop loss is sitting down here, which it should be if that's your run, that's the candle I want to see get taken on the upside close, which it did right there. You come back inside your fair value gap. Now you want to see this go, leave. If it's not leaving, and the fact that it's attempted to get up here and failing, worries me, and the fact that this has not been taken out here yet. So watch how you put your faith in this every little reversal here. Campione, you want to see it validated, all the rules of validation for a swing. You want to see that low get taken with this and that order block there, get like multiple confirmation. 1, take out that. 2, create the fair value gap. 3, trade above it. 4, clear the order block that supports that breaker. So that's a breaker, last up close candle before running these little lows out right here, these swing points. Takes it out. So you want to see that breaker get taken to the upside. It does. Now you don't want to see it trade any lower than the very bottom of that breaker. Ideally the mean threshold. If you start trading below the mean threshold, start getting nervous about it, saying, eek, I want to see that really start getting some legs here. Get out of here. It's came back up to the mean threshold of this candle, and it's failing. So you're in a consolidation. It's not got any major momentum to get out of here. It has not cleared this old high. So you got relative equal highs and relative equal lows. And now you're coming back into the middle of the range. So be careful when you, as you're watching this, buddy. If you see that on the 5 minute, trade it on the 15-second and see if you can get like a run back up into 50% of the wick, the old high, if you can get it. The fact that that's not taken out there, that concerns me as a not a strong reversal. So it's not a proper inversion, as you call it. No entry yet. Okay, good. You're not taking this yet. I'd wait on this one. If you're looking to take this as a reverse, and again, it hasn't taken that out, so I wouldn't bank on it. Really strong. It's not a strong inversion for me, but right there, that's the very last jet. So if you're on the wrong side of this and it comes back, gives you an opportunity to get out, it's running for these lows here. I'd love to catch a nice little oil reversal right now, because we've taken out all this stuff down here on the 15-minute chart. The 1 hour chart, it's cleaned up all that, but you do have this little 1 hour fair value gap below you. That busy. It's got to explode out of here, man, because it's just sitting down in one of those ugly consolidations right now. So you want to see a big displacement candle and a cam model 1 entry for a real. Let's get out of here, out of Dodge. Don't look at that. Look at cam model on that. Big displacement. Come back, give it a kiss, and off to the races we go. Okay, that looks like it's it for me this morning. It's 10 o'clock. I'm going to go spend time with my girl. Let's look at what's going on here. Let me get this thing out of here now. I just want to look at this level right there. This is still keeping your reversal for those who are short on this from up here. You're waiting and waiting for at least an hour already. You've been waiting for that to get down there. Your ideal entry was right there for the short, and you should be paying yourself below the lows and at the fair value gap finish, which hasn't done yet. And then it worked its way all the way back up to it one more time to that level. And we just whipped down below these lows. So you're in a sloppy situation, but you're still short overall. Move your stop loss to break even, let that sit and wait and see what you get. See if we get any further run down into that fair value gap below you in that order block here. But that's it for me. Thank you so much, you guys, for sticking around. 20 or 19, 20 of you guys sticking around. I appreciate your time. Hopefully you got to learn a little something. You got to enjoy a little price action. At least we came out with a little bit of money this morning. Despite all that sloppy price action, we managed to catch that little run up to our objective and move to the sidelines. I'd like to have seen this CAM Model 1 entry for us this morning. Didn't hit it. Even just a tap into that fair value gap, didn't hit that either. So we got a cleaner run off of somewhere in here. There's a 15-second chart I got in on a trade, 209, I think it was 209, yeah, somewhere in here. Using this fair value gap as an inversion to go higher. So we got that, got our run, and paid a little bit of money today. So I hope you guys got some cash. You got to learn a little something, and I will see you guys bright and early tomorrow morning. Thanks again for tuning in, and those of you who've been subscribing, we're into the 900s now. It's just pretty amazing. So again, awesome. Thank you very much.